Hey, Todd Martin, Asian equity strategist at Societe Generale, joins us this morning. Todd, big question. What's going to happen?
Well, there's probably a 50-50 chance that Bernanke is going to, I think, execute QE3. I think it would be at least as big as QE2, so at least $600 billion. I think it's also going to be including a jobs program and quite possibly more asset purchases, specific asset purchases in the U.S., which I think could surprise people.
Okay, what about conspiracy theorists? Yes, I have to bring them in because they're saying, why be so predictable in your moves? I mean, didn't Bernanke announce QE2 at Jackson Hole last year? Why would he do it again this year?
Well, I think you can't just predict things because you're somewhere. I think markets are doing certain things.
Right.
The U.S. banking index fell 11% a week ago Monday. That's a very serious sign that something is wrong or potentially wrong in the financial system in the U.S. You have 5-year inflation expectations at 2.8%. Some people say that's too high because you had them around 2.5, 2.6 when they announced the last QEs, but it's falling very, very quickly. And the last thing Bernanke wants to be is behind the curve on deflation. This goes back to his original deflation paper in 2002. And it's very, very adamant that having at least an operating, healthy financial system is imperative to fighting deflation.
Yeah, is there deflation in the U.S.? I mean, we saw the latest PPI numbers and CPI numbers. So some are saying that in some ways ties the hands of the Fed and what they can do to stimulate the economy.
There is 2.8% 5-year expectations.
Right.
That can collapse. That can collapse very, very quickly, and we've seen that during 2008 in previous instances. So what he doesn't want is a collapse, and there's a lot of concerns. We had, Hewlett-Packard fell 30% in the last 2 days.
Right.
That is signs of distress in a certain industry where one market player is dominating, okay, and everybody else is getting eliminated. So you have to keep that in mind. And I think we're getting to the point now where the Fed could potentially act. And if he does act, it's usually very, very positive for emerging markets.
But you have dissensions amongst the Fed board governors right now. You heard from Plosser, you heard from Fisher saying that policy shouldn't be dictated by people wanting to invest in the stock markets, basically. And they think this is a big mistake for another round of stimulus. What do you think? I mean, you heard from Angela Merkel. She refuses to be bullied by investors right now.
Let's say Bernanke doesn't act.
Yeah.
If there is a crisis in the financial system in the U.S., they're not going to go and say it's Fisher's fault.
Right.
They're going to blame Bernanke. So I think it's Bernanke's choice.
Yeah. Really? But 3 dissensions is a mutiny, some say, and that's what happened when he actually even tried to put a timeline into keeping interest rates pretty much where they are. You think he's going to be brave enough to go it alone if he has to?
This is why I sent out to all my clients on Friday to reread the deflation paper from 2002. He's very adamant that he's not going to allow deflation in the United States.
Wow.
So if he does that, it means at least $65 billion of capital inflows for emerging markets. Asia will outperform. It's already starting to. You've got China and Korea on 7 times earnings. I know a lot of people are now, I've read all over the weekend, valuations don't matter. Well, if valuations don't matter, that means value investors should be getting in now and looking at these markets very carefully.
How do you judge valuations when you don't have, some would say, the right earnings perspectives? I mean, you haven't seen earnings revisions come forward yet, and they should be, considering the global growth environment we're in. So how do you judge value?
Dividends are much more sticky than earnings. You can also look at cash flow. Dividend yields are anywhere from 3.5% for a very conservative utility in Hong Kong, all the way up to 10% up to some other emerging markets around Asia. Having dividend yields above Treasury yields in the U.S. usually indicates that value is showing up.
Okay, so look for stocks that have big dividend yields right now.
That is one side of my portfolio. The second side is just looking for completely bombed out cyclicals. I look at stocks that outperformed over QE2 and have been annihilated for the last month and a half.
So
these are my those are chemicals, autos, oil and gas, and tech. So looking through that, you look at S-Oil. I look at Formosa Chemical, looking at Hyundai Motor, Tencent or Lenovo. All these are yielding well, and I think are going to survive the next 6 to 12 months very well. If you're not looking for value in the market right now, what were you doing 12 months ago?
All right, that's a good point. Now, let me ask you this. You said if it was your money this summer, you said this before, that you wouldn't be investing in the markets. Right now, you would be if it was your cash?
I was investing last week.
All right.
Yes.
Interesting, Todd.
So I'm investing in Hong Kong utilities, and I'm looking at Korea very closely at the ETF. And I am investing my own money right now.
Wow, Todd, that's a big statement. Thanks for joining us this
Thank you for
morning.
having me.
Todd Martin, Societe Generale